one of the issues we've been wrestling with is there's this danger of inflation or maybe even hyperinflation, and it's a danger. We haven't seen it. I don't expect it tomorrow or necessarily anytime soon, but you can't wish the danger away. But there are a lot of analysts who are saying, it's right around the corner. We're going to have hyperinflation, buy gold, do this, get ready. And people have bought into that narrative. Some have, and they've been disappointed. They say, well, wait a second. We don't really see much inflation. In fact, deflation appears to be more of a danger. In recent times, oil's down, gold's down, commodities are down, et cetera. So they're like, what's up? And they lose, that narrative kind of loses credibility. And here's what I would say. Inflation, much higher inflation, maybe borderline inflation, hyperinflation is a danger. But so is deflation. They're both dangerous. And the way I think about it, go out to the desert east of Los Angeles and go find the San Andreas Fault. And you can do that. It actually is out there and you can spot it because it's kind of green. Well, I went out to the San Andreas Fault one day and I stood with one foot on either side of it because you actually knew where it was, and nothing was happening. It wasn't shaking. But that doesn't mean it's all good. We know that underneath there are these enormous tectonic plates, one coming in from the Pacific Ocean, one coming in from the continental U.S. They're pressing against each other, pressing against each other. The pressure is building up and they're going to break. We know this. And it's going to cause a massive earthquake and it's going to cause massive damage. But which way? Is it going to break this way or this way? That's what we don't know. And that's inflation and deflation. So my advice to investors is be prepared for both. By the way, the guy who's doing this is Warren Buffett. Warren Buffett's buying hard assets, but he also has $55 billion in cash. The hard assets are his inflation insurance. The cash is his deflation insurance. So when you hear about these things, it's not that they're totally invented, but you can't put all your bets on one side of the table. So my advice is have some inflation protection. Have some hard assets, whether it's gold, energy stocks, silver, land, fine art. There's a basket of hard assets, but don't go all in. Make that a slice. If the hyperinflation comes, or even the extreme inflation comes faster than we expect, that's going to preserve your net worth. But over here, have some deflation protection. What would that be? Bonds, fixed income, cash. By the way, cash, a lot of people say, well, I hate cash. It has no yield. It just sits there. It's not sexy. It's not interesting. And say, no, you don't understand what cash does. First thing cash does is it takes the volatility out of the rest of your portfolio. So if this is volatile, and gold and commodities have been, and over here this is volatile too, having cash reduces the overall volatility. It's a little bit technical, but that's what it does. So you can sleep a little bit better at night. Cash is also a great deflation hedge. Remember, in deflation, the value of cash goes up, so you're not getting a big yield, but in real terms, that's becoming more valuable every day. But the third thing cash offers you is optionality, the ability to pivot. So I might not be in cash forever, but I like having some cash now. So to me, the model portfolio is have some hard assets, that's your inflation protection. Have some bonds, that's your deflation protection. And have some cash to reduce volatility and give you some options. Now you're ready for anything. If deflation takes off, you're glad you got the bonds. If inflation takes off, you're glad you got the gold. And if there's more confusion, you're glad you got the cash because it reduces volatility and lets you pick up some bargains. By the way, if the market crashes, and you got some equities over here and the market crashes, you might lose on that. But now you're the guy with the cash, you can go out and buy some bargains. So that's the way I think the smartest investors do it. They're ready for anything, and that's what we talk about in strategic intelligence.